Hi, this is James Shrug at Westpac with the London end of day report for Tuesday, September the 18th. Negative day for equity markets here in Europe, not really driven by any particular news, just profit taking, a sense that the economy in Europe, or the economies in Europe might be struggling a little bit relative to what's been priced in by markets recently in terms of enthusiasm related to the European Central Bank's bond buying plan. We had some news out of the auto sector with sales disappointing in August. That saw the automakers like Peugeot, Citroën marked lower. We actually had the German ZEW analysts survey for September. It showed quite a decent improvement, the first rise in 5 months. The survey was taken after the September 6 ECB press conference, so no doubt reflects that the optimism I referred to related to the bond buying plan, but it wasn't enough to push the markets higher in Europe. The UK inflation figures showed a slight fall from 2.6 to 2.5% in the annual CPI. That's almost a year now since the CPI peaked at 5.2%, so it's half the rate it was a year ago, or September last year. The Olympics didn't have much of an impact that was discernible in the data. The main driver of the slightly lower rate was clothing prices, furniture prices and utility bills. In the US, we had figures on the current account which showed a narrower deficit in the second quarter, mainly because of the lower the lower trade numbers, trade deficits we saw in the monthly data, but also because of a higher income flow into the US in the second quarter. Because we saw July inflow-outflow numbers for the US, which showed a big capital inflow into the States in July, reflecting, I suspect, concerns about Europe, investors seeking US dollar safe haven. That would have been ahead of the whatever it takes comments by Draghi, ECB Chief Draghi at the end of July. The NAHB, that's the National Association of Home Builders, their latest index for September rose to a 6-year high, so the housing market is continuing to print better numbers in the US. That's it in terms of news. We had the one of the ECB Council members say that if Spain continues to resist the applying for a bailout and therefore qualifying for ECB bond buying support for its sovereign debt market, then bond yields in Spain will soon push higher the longer that Spain delays. So the bond yields fell very sharply after the ECB detailed its plan, but Spain has to agree to a bailout from the bailout fund and the conditions that go with it before the ECB will actually buy the bonds, and so far Spain has been prevaricating on that. That's it really. In terms of the markets then, in Europe, some losses to report. We're looking at the FTSE off 1/3% in London, the French market down 0.8%, the Germans off 0.5% today, the Spanish market's down 0.9%, and the Italians off more than 2% today. But as I speak, just heading into the European close just before 5 o'clock in London, therefore just heading into lunchtime in the US, the Dow is unchanged. It's at 13,554. In commodity markets, nothing too exciting there. We've got gold prices up 0.2% at $1,774 an ounce. Copper is unchanged, and the oil price is down 1/3% at $96.28 a barrel. The Aussie dollar is about 1.045 against the US dollar. It's been drifting lower through today's session, but also it took a bit of a hit after the Reserve Bank's minutes, which revealed the bank being perhaps a bit closer to a rate cut than markets had expected. Certainly our view is still that they'll cut in November and December, but they could make the case for an October rate cut as well. That's really it. We've got figures, what is it, the leading index coming up, Westpac's leading index, and there's a conference in Canberra, IMF and various Australian officials speaking, which could be of interest. Okay, that's it for today. I'll be back again tomorrow.